All right, everyone. This is group 4, and for the presentation number 1 over the income statement. My name's Austin Johansson.
I'm Tyler Fielding.
And I'm Sierra Driscoll.
And we'll be taking you through our income statement for our consulting project number 1. To start out with, just to kind of give you an overview of where we're coming from, we felt it was best to go over some of the assumptions that we came with. So our company is Edible Arrangements in San Antonio, Texas. So the population of San Antonio, Texas, so this is, the way that we computed it is between 2010 and 2017, there was a 26% growth rate. And so I just took that and I divided it by, I divided that by 10 years, or sorry, 15 years, in order to get how the average growth rate per year it happened. And so our first year we have 1,400,000 as the population, and then each year it grows by 3%. The average spent on arrangements per year. So per person, and we just kind of figured that some people buy arrangements, some people don't. And so on average, if you were to average all that out, per person in San Antonio, about $100 per person would be spent. And then that would grow by 2% each year, as you would see here. And then as far as arrangements sold per year, we did 10,000, and that would grow by 2% as well. With the competition, now San Antonio is a really large city, and so instead of basing it off of the citywide population, I did the immediate area, and there was about 20 floral arrangements, different type of arrangement places that someone could go to, and so that's what I used as my my competition number right there. COGS, we just came up with 45%, 35%, and 2%. These were just numbers that we created on our own. Average labor hours, about 7,000 hours per year. And then the wages, now the minimum wage was $7.25, but in San Antonio, Texas, where I'm from and I live currently, hardly any jobs are at the minimum wage of $7.25. So I just did it at a solid 9 just to make the computations look a little neat. And then as far as some expenses go, there's the average gas price for deliveries and so on and so forth. So right now the average gas price is $2.43. And I just made an assumption that it would grow 2% each year, the average would. So that's what you're seeing right here. And so from there, Sierra will take over and kind of go over our computations that we did.
Okay, so the very first thing that we computed was obviously net sales. And the way we computed that was just by taking the average spent on arrangements per year, timesing it by the average arrangements sold per year. And we had that growing at a 2% rate. And then to calculate the cost of goods sold, we decided on a 45%, 45% of net sales was going to go towards cost of goods sold, which then gives us that $468,000 that first year. And so then from there, we just calculate our gross profit, and then we continue on to expenses. And general expenses, they were also a percentage of net sales, and that was at 35%. And then salaries and wages, we used the average labor hours times by the current wage that Austin presented us with. So that's 7,000 labor hours and the wages of $9. And then to calculate our shipping and delivery expense, that was because we're Edible Arrangements, we have a vehicle, and so we're going to be kind of hand delivering our things. So we calculated a lot of vehicle expenses based on the gas price, fill-ups per month, and the number of gallons per tank. and that was 9,000. So to calculate that, we just did the average gas price times by the number of gallons per tank, which then gives us our total amount of gas, and then times that by the 25 fill-ups per month, and then we times it by 12 to get a yearly fee or a yearly cost. And then for the depreciation, we just took the building and the equipment costs, added them up and divided them by the 30 years of the mortgage loan. And so then from there, we then have a mortgage loan interest expense, which we created an amortization table on another sheet right there. And that's how we calculated that and just drug it over to our next sheet onto our income statement. And then an insurance expense, we thought that that was kind of an important thing for the business. And so we just decided that it would be like 2% of our net sales, and that kind of turned out to be 20,000. It just kind of grows as our sales grow. And then after that, we have our income tax expense. We decided on a 25% tax rate. And the reasoning behind that was just, as you can see, our net income before taxes is kind of low at the beginning. So it's 19,000, and in a normal tax bracket, that would be about the 15% bracket in a business setting. But then as it grows to year 10 to 107,000, that would then increase it to the 25% tax bracket. So we just decided to have a 25% tax bracket all 10 years. And then from there, we calculated our net income. So,
all right.
Yeah.
So as you can see, based off of our assumptions and with all the expenses that go into our income statement, we are able to grow exponentially throughout these full 10 years. From year 1 to year 10, it times itself by a total of a little bit over 5 times the profit. So we are able to realize a very long sustained net income, and we do believe that this company will be able to grow and continue to have a profitable net income throughout the lifetime of its business.
And just one other thing to add that you might have a question about. So Edible Arrangements, it is a franchise model as far as a company goes. And so there would be franchise expenses tied to our expenses and tied to the sales. And so for that, in our assumptions, you will see that we had, if I can find it right here. So the franchise expense is 2.5% of your net sales. So when you go down here and you go to the franchise expense, that's what that calculation is doing, is it's taking the franchise expense, timesing the net sales to get us 26,000 a year. And that's how franchises are set up. They usually take a percentage of your sales, or on rare occasions, they'll get a flat cost every year in order to, have the name Edible Arrangements and to kind of run that business. So that is our presentation, and hope you guys learned something. We're very open for your comments and your concerns with ours, and also your ideas of how we can make this better and more clear for us as a group, but also as, as we go throughout the semester and with our consulting projects. So thank you for watching, and hope you guys have a great day.
Thank you.
Thanks.